So flex space, can you define that?
It's a solution for typically it's 90% warehouse, 10% office. We identified a perfect product market fit because with the 10,000 homes being across there, well, who needs to service them?
Hey there, and welcome to another episode of the Jack Bosch Show, where we talk about all things real estate, finance, and entrepreneurship. And today, my guest is Jonathan Tuttle. He is the COO of Land Play and Flex Office Development Company in Texas and the Austin space. And well, we're going to talk about land development today, which is always a hot subject, always something that a lot of people ask us to talk about. So, Jonathan, how are you doing today?
Doing well. Thanks for having me on. Excited to be here.
Wonderful. I'm great. And I understand you're coming from us from Santo Domingo.
Yes. I was just in Nashville
really
last
cool.
week. I'm back down here. Yep.
Goes to show that land development can be done virtually.
Yeah. Well, my team's boots on the ground, so all my partners are
Okay.
there.
All right. So you have team, but you get to be other places. So very good. So tell us what your company does and what specifically your company does. Well, land development is a big space. What do you guys focus on and where?
Sure. Our niche focus, we're hyper-focused right now currently. Like 8 out of 10 fastest growing markets in the United States are in Texas, and we're focusing on the hyper growth in those markets. Flex space development, quick turnarounds. We're also doing some like hybrid retail with medical office. And then also we're looking to do some data centers from office conversions later on down the road, the bigger picture. But right now our focal point is definitely flex space development while there's a huge product market fit for it.
Okay, so flex space. Can you define that? What does that typically mean for somebody who just doesn't know the commercial real estate space?
It's a solution for typically it's 90% warehouse, 10% office. So think of like an HVAC plumber. They want, instead of driving back and forth, having 2 locations, they want one cohesive place in one building, basically.
Okay, so
It's flexible.
they have an office up front. They have somebody that picks up the phone, like a scheduling team with like perhaps, I don't know, whatever, 1,000 square feet or 500 square feet, where they're 2, 3 office rooms where they go and schedule stuff, billing and invoicing and ordering of parts and stuff is in there. And the trucks are parked up front so that the team members come in the morning, pick up the truck, and then go different places. But then in the back, there's a warehouse, and that warehouse is basically what might be a 5,000 square foot warehouse, a 10,000 square foot warehouse, depending on the size, could be a 50,000 square foot warehouse, where they basically keep their, if it's an HVAC company, all their different kind of like their pre-order parts and the boilers and the HVAC is not boilers, but the compressors and all this kind of stuff, and the HVAC, the repair, the gear that they need to actually do their job.
Yeah, but we focus on smaller size buildings because of the sprinklers. There's a national 12,000 square feet is a national allowance for sprinklers because it costs, pro tip, it's not the cost of putting in sprinkler systems in the building, because these are prefabricated building. They're normally 30, 50,000 depending on the footprint. It's the tapping into the water main could be 200 to 300,000 per municipality, and it becomes like a big thing. Just adding extra cost.
So let's talk. So obviously these rules are municipality to municipality and region to region, but it's something. What I'm hearing you say is something. What you're pointing out, that you guys staying under a certain size in order to not fall into certain regulations that cost a lot of money. So in your particular case, what is that regulation?
Yeah, well, our whole business model is like that. So for example, we only work in markets where it's a 3 to 4 month land, like where it gets approved. We don't look at any deals that it's gonna take 1 to 2 years. We've actually turned down deals that were prime, but they were 1 to 2 years. It's a in the now in niche asset class, and so you want to be ahead of trends basically. And so we're staying ahead of the trend, finding markets that want investors in real estate and want their real estate taxes and want the business growth. So that's number 1. 2, we look for the national rule is about 12,000 square feet, and after that you have to have sprinkler systems. So our current projects, we have 7 buildings, 12,000 square feet each. And
so a building less than 12,000 square feet does not require sprinkler systems or simpler sprinkler systems.
Yeah, so it saves us probably about $500,000.
Okay, between the fees and the actual installation of it. Do you actually go vertical too, or do you guys just develop and then sell?
Yeah, dude, we're doing 1 floor, 18-foot ceilings, prefabricated metal rectors, like real simple. We like quick, fast, The build time is approximately 3 to 4 weeks to set up because it's basically like it comes in like a Lego box, like build it out. And our team, our GC, has built a lot of the Walgreens, no, not Walgreens, but built a lot of the self-storage in the area, and has also built a lot of the Walmarts in the area. So basically, it's all about our business model is all about finding product market fit and a niche where there's high growth, high demands, quick turnarounds with the least amount of headaches. So like we keep just because our team's done so many expensive, like I alluded to before, my team's done 100 million. One of the partners did $100 million full cycle in that local market, Austin. He sold a property land adjacent to the Tesla Gigafactory, 160 acres. It's about 2 or 3 years early, but he had the foresight to see that was going to be a great area before Tesla came out there. So we have a lot of off-market deals and relationship with the owners. Everyone kind of knows who my partners are in the area. So we got a lot of deals, and we looking for all the things that can make it super simple and just make it a super efficient process to develop it and get into the next project. So we have a full pipeline of deals coming to the market really soon here as well.
All right, let's unpack that a little bit. So in your market, below 12,000 square feet means no sprinkler system necessary.
That's that national rule. That's a national.
That's a national rule.
Yeah,
Okay.
some states are 8 to 10,000, depending on the municipality, but the national rule is like 12,000 square feet.
Okay, so again, 8 to 12,000, you got to check the rules. But obviously, if you stay below whatever that threshold is in your market, 12,000, it saves you construction cost of between $300,000 and $500,000. So,
Yep.
so if you, but it also means that, like you said, you're building these properties all the way. You have them like Lego box installed and so on. But if you were not to do the actual development, if you were not go vertical, if you just do the entitlement of it, get it approved for it, by having it below that threshold, you actually added $500,000 worth of value or like worth of savings to it, which means that you could probably sell the land for a little bit more than if you would have designed a 13,000 or 12,500 square foot building, correct?
Yeah, there's no point to do the 12,500. Yeah,
I know, I'm just doing like, it's an academic exercise just to say like, if you by mistake, if you didn't know that, you weren't aware about it, and you just created something that just over the course, so the cost of building is not much more except for the $500,000 for the sprinkler system. So you basically destroyed $500,000 in value in the project by just going a little bit too large. So by staying below that, even if you just do the entitlement deal, you can probably make some extra money, right?
Exactly. Yeah, like even the deal we bought, we acquired it. So it's on I-35 for the specific deal with the 12,000 square foot each. It's 110,000 vehicles, maybe 120,000 vehicles per day going there. It's Texas C-Box, whatever the exact synonym for their brand, but they're putting 3.5 billion into adding more lanes in between from Austin to San Antonio or directly in that highway. They're also building 10,000 homes directly across the street, the Mayfair project, or the Mayfair project. And then there's another commercial development project. So there's about 7 to 10 billion in that development on this this whole highway from Austin to San Antonio, specifically New Braunfels is like the main focal point, and that's why. Like we just put the signs up last Thursday for the leasing broker, and we are getting like, and it just says the 12,000 square feet, just the first project, and we're already getting like the leasing broker's like, this will be gone instantly. Right now, he was like super excited. But yeah, it's just literally identifying those little product markets that like with land.
Yeah, absolutely.
Land can
now
always
in your case, you're entitling it, you're developing it, you're building it. Do you keep it afterwards, or do you go then and once it's fully occupied and fully maximized, do you sell it?
Well, for this deal, we're going to sell it. It's 24-month exit 'cause we have investors, but yeah, or we roll it up into other exit or exit into other deals. Just depends. But right, this one we're checked to do a 24-month exit once we break ground on it.
Okay, but do you sometimes hold on to it? Do you build a portfolio of them too?
Yeah, some deals we do hold on to it if the price is right, and if somebody has the price is right, my partner Harry is like, if the price is right, and somebody gives an offer we can't refuse, then of course we'll do.
Okay, so this is basically it's in the best sense of the word an opportunistic business strategy, and I don't mean that at all negative. I mean that actually with absolute thumbs up and amazing that you guys basically identify there's growth in the area, there's a need for these kind of things. This is a municipality or an area where the approvals are short, where demand is high, where we can put $12,000, 12,000 square foot units in there, which are below the level. And on top of it, that's the last part I want to jump in before we go transition into something else, is you mentioned that you have them delivered, site delivered, pre-factored. Who produces those kind of things?
You have to talk to my partner Alex. I don't know who he's using. I don't handle that aspect of it, but yeah, they're just metal manufacturers. I don't know exactly which brand we're using, but the beauty about it, it comes it's a really quick build. It takes 4 weeks to set up from the ground up, and we just like really quick build out because like you mentioned before, like my dad's background, my dad was a general contractor for custom homes, so I grew up. We built 75 custom homes, and nothing luxury, but the mid-tier houses, and so I knew the process of seeing development, going to the job site. My mom would be doing checking on the blueprints, all this, and like this is just so much simpler to build a flex space than actually even a house, a single family house, so like 120.
So in other words, you're telling us, I think the thing that the audience might not know is that there is companies out there that you can go and say like, here's the plan,
Yeah.
it's a box,
Yeah.
here's the office part, we need one toilet in it, we need one mini kitchen in it, we need things, and then they deliver. If you pre-order it, how much lead time do you need to pre-order it? Do you know?
Couple of weeks. Couple of weeks.
Couple weeks only. So
Yeah.
a couple of weeks before you
They're
need it, you
building
order
stuff.
it, and they
Yeah.
basically bring a bunch of truckloads of stuff, and within a matter of 4 weeks, you have a full-blown building standing there.
Besides and then it doesn't also include us if they want custom, like hey, like the custom office, that could be take more because that's not the prefabricated metal. That could be
Sure, sure, sure. Yeah,
that's
absolutely. But basically, you got outside walls, you got the lights in place, you got a floor, concrete floor in place, you got an
yep.
office with some basic like with outlets and stuff like that, and all of
Yep.
that can be put together in like basically a month. That is crazy.
Yeah, that's the beauty about it.
That's the beauty. Like, yeah. So that's why I love talking to you here because that's just like opening, I think, a lot of people's eyes to the possibilities of real estate. That real estate is not always just a custom home that takes 2 years to build and where the buyers wants to have everything changed possibly. But this is just like this is a utility building used by like an HVAC company. They want it standard. They might some want to have some changes, different cabinets and stuff like that. But they can even do that afterwards, and that's it. So love it. So now let's transition over to a couple of questions. One of them is like, what trends are driving the demand for this flex space right now? Because I talked to multiple people right now. There's a lot of, I know data centers, you mentioned those, they're big demand because of obviously the AI and things like that, where true warehouses, like big warehouses, like are in demand because of like Amazon and things like that. But what is the demand driver for something like flex space?
Sure. And so we identified a perfect product market fit because with the 10,000 homes being across there, well, who needs to service them? HVAC and plumbing, and then now they have this bigger what? It's gonna be more traffic on the highway. They want to have a closer proximity. And if the plumber come the next day, well, you want the signage from the major highway with all the vehicles going by. And then you also want to be able to have that short commute to the local subdivision and commercial development right next door. And so it's going to be HVAC plumbers. Is primarily is going to be focal point. We've seen another one in New Braunfels, is actually the largest bingo chip maker in the US. It's not one of our tenants, but just getting people kind of example. Doggy daycares are really big. So people want to have a location and people pay 10, 20 bucks a day to drop or 300 bucks a month, 400 bucks a month to drop their dog off every day on the way to work. Those type of tenants. Places where they store marble, like granite, marble, those type of where it's kind of like they want this high visibility. And then it's mostly just, they walk in and see the product and then they have a little office. Those are the typical tenants you'd see.
Okay.
And then to answer your point,
do you
yeah, like
see,
identify a market that needs it. So
a lot of the world is talking about that small America business is being squeezed out in favor of the large businesses, but you don't seem to see that, particularly in those kind of industries.
well, they're getting rolled up, so it's actually smart. So like if people don't know the context for it, like so HVAC and plumbing, private equity is acquiring them. If you're a mom and pop owner, if you open up another location, if you have a $2 million EBITDA, you can sell it for 7 to 10 multiple. So you can sell it for 15, 20. If a typical HVAC will sell exit out for $2 to $3 million. But if you open a second location, a third location, that's where they want to do it. Because then the brokers are telling them like, hey, just open a location, hire a few, you guys that are, they're qualified for this, especially HVAC and plumbing, because they have to go to trade school for it. But they now get a 3x multiple on their exit. So it's really incentivized them to open another location. So because the broker's selling that, the business brokers like, because they business brokers get incentivized too, because now they're selling a $15-20 million asset instead of a $3 million asset.
Sure.
And the owner can make an extra $12 million just by opening another one or two locations. And
Isn't
so
that interesting that that's you don't just want to see like obviously it makes sense to put for all these like HVAC and these kind of services to be across the street from a new 10,000 house development. That makes perfect sense. But isn't it interesting that other business dynamics also might drive the need for that? For like, for example, that well known like for years doctors offices were bought out by private equity. Like I know multiple doctors, friends of us that whose practice was bought out. They ended up selling to these private equity companies with a 5-year contract afterwards, and after 5 years now a lot of them are either moving on or something, but they had a cash out day instead of making whatever a few $100,000 on their or $500,000 or something on their job every day. They're getting now a $5 million sale and they're still getting a $400,000 salary. So they're basically making the same, but have $5 million in the bank, took money off the table, and so on. Now the exact same thing is happening in the air conditioned HVAC and plumbing and those kind of trades worlds. It's well known if you pay attention to it, and obviously you guys are paying attention to that very closely. Good. So what else drives demand for these kind of things?
yeah, it's basically right now there's a shortage of it. So if you look, we looked at the data, and it's a quick turnaround time. So the beauty about this product too is with the quick identifying their correct markets to work in, besides getting the municipalities to approve it right away, it's also, we know it takes very quick to get the product shipped over and then set up, and then it's very quick to get it going and boots in the ground and then exit out of it and leased out. So as long as when you're looking at real estate and land specifically, and I can talk about other niches too, but you want to find like things where the trends are happening and all the trends are lining up right now. I would say in 3 or 4 years, flex space will be a different story. I tell people right now, it's like, 'cause I also invest in mobile home parks. I just spoke at the IMN Nashville, Manufactured Housing East, and I was a moderator. It's a big private equity institutional operators in the mobile home park space. And we've seen that from 2010 to 15 was like the heyday when you should acquire them. Same with like RVs, same with self-storage, because it all started pivoting it over to institutional owners grabbing all the good deals. And then also, the private equity started coming in, and then also more sophisticated buyers came into space. So right now we're early on the flex space. Like if you've been in real estate long enough, you start seeing trends ahead of time and taking that data. And it's like, hey, where's the product market fit? How do we eliminate the most variables? How do we have a seasoned team that handles every aspect? And it starts from just having that knowledge and understanding your market too, and understanding the trends, and just mitigating risk as much as possible. And that's what I love about this. And because I grew up in a real estate developer family, and like it does take a lot of work usually to develop, but this is probably the most efficient development you could possibly do in any real estate that I know of.
Yeah,
Besides
that makes
parking
sense.
lots, maybe besides like a
Now,
flat parking lot, maybe.
let's talk about that. So you said like in 3 to 5 years it's going to look different. What do you expect to happen in the market in three
It'll
to
be
five years?
saturated by then. It'll be saturated because it's low barrier to entry. So now is that time to get ahead of the trend, get out, make your money, put the deals on. That's why we're putting the deals into other assets. So the
So
next trend.
saturated in that case means rents might be going down, or do you
No,
see?
no, I think it'll just be more. It'll be saturated. Like for our markets, we're looking for 16 minimum a foot. But like as the development happens, they'll be pushing up to probably 19, 18, 19 is
Okay,
even
what
that.
does that mean? 15, 16, 18, what does that price per dollar,
Yes, foot
rent
for
per
square.
foot?
Yeah, triple net per foot. Yeah.
Triple
So
net, how much per square foot?
Well, we're asking. Well, I think right now we're asking. I'd have to quote the listing broker, but I think they're asking 19. But I think we'll at least get 17 right now. But it's going to go up. But the play with
Okay,
where
so
our
$17 a square foot, that is the lease, is that per year, right?
yeah, triple net.
Yeah, so triple net. So if you have 1,000 square feet, that's $17,000 per year. So in other words, that's like $1,500 a month. But if you have 10,000 square feet, that's obviously then $15,000 a month. But 10,000 square feet is also a lot of space. I would assume that your $12,000 square foot buildings are usually not single tenant, right? What is
Two
a
to
typically? They can be, of course, but what is your
right.
typical size of tenant that you have in your buildings?
We're identifying for three for this, like 2 to 3 per. So three
Two
to
to
four
three.
thousand,
So 4 to 6
four
to
to six,
8,000
3 to
square
4.
foot
Yeah. And something if we
buildings.
want to, they could. Yeah.
Yeah. Okay. All right. So then in 3 to 5 years, what do you expect? Just these things to sit open vacant for longer,
No,
prices come down. What does a saturated market look like in your mind?
well, for our, because we identified property on the proper main highway, but so we see because of where it's at, it could also be converted into retail property that needs less sewage and water, like less sewage and water, basically. So, and they'll still command that, and or it could be a redevelopment play. So they could tear it down just for the land value. But the main thing is, um, right now it's still early in the market with that asset class. So like I wouldn't be, but in 3 years from now, we probably won't be doing any development in the flex space. That's just we know we're going to be pivoting into other projects that are already starting now. So it's always good. Like I wouldn't even buy like mobile home parks. I won't even. I'm not buying anything right now. And like everyone, people call me and like I'm like, there's no good deals. Like with the interest rates, there's another land type asset. The rate of a lot of the good owners that had properties that didn't sell in 2021, they have this mindset like, oh, I can get this for it, but we can't do that with any leverage because it's not these rates that you had in 2020, 2021. And then a lot of the deals, it's just, it's just hard to find deals. So like you always want to stay ahead of the trends, basically. Like I like when the assets class early, it's like in technology, you want to be early, the early adopters before the mass, then everyone talks about it. But like even with the mobile parks, people are like, oh, it's a turnkey asset. No, it's not. Like you have to make sure the sewage and water underground is like what you don't see is the biggest headaches. And so a lot of people come to this asset class and that asset class, they don't know what to do because they think it could be 3 or 400,000 to replace the sewage system below it. And
Yeah.
so at this,
And it's also interesting. It's interesting to see that you're in Austin because Austin has been recently. And I want to make a point in that, and I would be interested in your viewpoint on that point. Is Austin has been recently in the news as the place where real estate prices are falling like crazy, like and but that goes to show that if you're not dealing in the same asset class, you're not building single family homes where the
right.
prices are falling right now. You're providing the space for companies to service those homes. And the homes don't go away just because prices go down. The people still need to have their HVAC service and their plumbing service and their pool service and their and all their roofs fixed and et cetera, which is your customer base. So how do you see though that impact of Austin pulling a little back in expansion and in pricing and things like that affect your side of the business or not at all?
Oh, it helps us actually because we're in between Austin and San Antonio. So we're the value, and that's why they're building out everything there. And what made Austin grow, the average house for a
So where you're building is where prices are already lower anyway.
yeah, and so we're gonna only get the benefit of that actually growing up and people moving out. But the thing is, there's 1.5 million people moving into New Braunfels over the next 10 years, 1.5 million. And Austin, the reason why Austin was the most expensive single family house market in the country besides out of Oakland. So an average house for a 1970s or 80s beat up house is $1.2 million because everyone moved there in 2020, 21, got the low interest rates, and the housing didn't even make sense. Like I know people that have gone to Austin, like they would be like at a house that'd be $400,000 in any like major suburb out of a major city and anywhere else. It was 1 million to 1.2 million and it was outdated. And so it was only just a correction because that was only make sense to have a correction. But we benefit actually from it because the price per square foot is actually even by San Antonio is 19 a foot for our niche type. So it actually benefits. And as people move down, they're gonna look for the opportunity to get the vehicles per day. And then where there's 1.5 million people moving, they want a better value, they're gonna be coming to New Braunfels. So it actually benefits us.
Very cool. I love that because the point that I wanted to make is, and you made it perfectly indirectly, is that um, just because the media is out there screaming, "Oh my God, real estate is bad," doesn't mean real estate is bad. It just means that, well, yeah, $1.2 million 1980s houses are coming down in value because they were overpriced in the first place. Doesn't mean population growth is not continuing. It doesn't mean people are not moving to the area. It just means you gotta be perhaps a little bit more outside of the city where in the path between those two cities where houses are being built for $400,000 or $500,000 or $300,000, whatever the prices may be. And all of them need services, and you position yourself in that market and you have a gold mine in front of me. So this is the point here is very clear. just just whenever you hear the media say something, ask follow-up question, dig into the data, because just because prices in Austin coming down doesn't mean real estate is on the floor in Austin.
Yeah, exactly. So yeah, that's the data actually works to our advantage. So
Yeah, beautiful. No, great. I think very, very smart. Very, very smart, guys. So when you see technology and data shaping the future of flex space, from how do you see that? How do you see that technology and data and AI and robotics and all these kind of things, from operations to tennis experience to even locations, to even need for locations and drones and all this kind of stuff? How do you see that impacting what you guys are doing?
well, I think with the AI, like here's the thing with the when going back to the HVAC and plumbing, the typical tenant. The reason why there's a shortage of people coming out of college because everyone wants to go work in the tech, but the tech is actually getting replaced by the AI agents. And if you look at the jobs in the tech sector, is significantly going to go down because AI is going to take over that. And so you probably will hopefully see it back, good paying jobs because those blue collar jobs, 100,000 plus for a typical HVAC or plumber that, it's nothing just driving there, fixing, it's nothing super complicated and they have job security long term. So I think just looking at the data, like the shortage of like HVAC and plumbers in the United States, I think you're going to start seeing a shift. People saying, okay, well, we know if it's a repetitive job, AI replaces a lot of people. If you really start using some of these AI apps and AI agents, it's like fascinating to see how much it replaces. And remember, we're only 10% office, so we're basically where people need to store stuff and then they want the visibility as well and proximity. So that's the beauty about it is like if we were like an office, which we're doing office conversions to data centers later on, but we're seeing where the opportunity is at ahead of time. And to go to your point too, is the office centers to data centers is going to be the next trend that we're going to be focusing on because of AI. And so the big, Zuckerberg just spent, I don't know how he's building ones bigger than the size of New York City, I think, or so. I don't know if that's like some like crazy headline or not, but like that's not our niche. We're looking for buildings that are going to be, and we're going to partner up with family office. We're getting a team built together for that, but it's going to be, we're seeing that for the next like 3 to 5 years, and then probably the next 10 years. That's going to be our next growth expansion. But those are going to be bigger deals. They'll be 100 to $300 million deals. It's going to be ones that have the power, the buildings that, have a certain height clearance, that have enough power supply, and then they're basically not getting enough, they're not getting revenue for the city. And so if you look at some of the articles you've seen for the last like year, some of these, you could buy some of these, not that we'll buy on a major metro like a super high rise, but you're getting these on pennies on a dollar. You see them like, oh, this traded for in 2017 for 200 million, just sold for 40. It's like, so just the infrastructure that's the next angle we see. We're going to partner up with some family offices on that for the long-term growth of the company.
Yeah. It's like saying this when they have ultimately when like Zuckerberg and those guys built those humongous data centers. One of my mentors said that eventually they're going to be the big job creation is only in the building of them, but then once they're built, they're going to have one person in there and a dog, and the jobs of the dog is for to prevent the person from touching anything. So basically, the person is there sitting there in case some absolute mind-blowing emergency happens where they have to actually intervene. But in the meantime, the dog sits there preventing the human from touching anything because there's no human intervention necessary. It's all working and it's all being so the tax basis for the county is very, very low because the stuff doesn't, yeah, as you said, doesn't generate revenue, but it's definitely an opportunity and it's something that people are building and if you're in the construction side. So now how do you guys fund all of this? And how did you grow into all of this? Did your company grow from Link? Did you guys do you have investors in your company? Is like how does because you guys, there's one thing like we obviously teach land flipping and we have a land flipping mastermind called the Ultimate Boardroom where a lot of our land investors coming together twice a year and then every month we come together virtually multiple times and we have land developers in our mastermind and we have land flippers in our mastermind and we have finance guys in our mastermind and we have all kinds of different things. And for example, the land developers, most of them operate well. they might bring an investor to come up with an earnest money deposit and the cost of the of entitlement. I mean, entitlement experts, not full development, but just the entitlement process. And then they go sell it and they make a bunch of money with it. You guys taking it all the way to to going vertical and all the way to completion. In some cases, even holding on some of them. How do you finance that? Do you have investors? Do you have a fund, or how do you go about this?
Yeah, that's a good segue. Yeah, so some of our projects we do keep. Like one of my partners would keep some of the next deal with our Huddle deal. That one's fully funded. By ourselves. This one we partially funded, but this one we're actually taking outside investors. And it depends on when this airs. We'll see. We'll be done with our first tranche. We're doing that in phases. And for this one, I'll just give you an example for the new Braunfels. It's really, really favorable terms. It's to the investors. It's actually astronomical. 22%, very conservative. Our projected IRR, that's very conservative on very conservative numbers. 12 pref, if you look at most funds, there's 7 to 10 pref, and then it's 80-20 split with a 24-month exit. So that's the deal, right, with our new Braunfels. That's on
I assume that is for accredited investors only. Otherwise, we couldn't really talk about it here, and then because it would be it's not allowed to advertise if it's not for accredited investors. But cool. Now, pref on a development deal, how does pref work? Because I mean, there's no revenue yet.
Yeah, we have different financial modelings that we take it based on our past deals and what the current market is. So
do you accrue pref or you pay pref?
We pay pref, and then for example, for this deal, like just give you an example, like the one we bought the property right before like all this announcement started coming out. Well, there was some kind of like thought coming out that this stuff was going to happen, and then we kind of had boots on the ground, so we knew it was going to happen. But like the deal we bought, I'll just give an example too. So if anybody's buying a deal, and kind of give you a land deal. So the owner, when we always try to find out like the gotchas in the deal. We found out that there was only thing we couldn't build on the property. It's kind of weird, but a strip club. So we went back to the owner and we're like, okay, well, we can't build a strip club here now, so we need to get a discount. And we got 300,000 off the price. Not even kidding.
That is funny. Now, obviously, did you plan to build a strip club?
No,
of course not. No.
He was going to use it for for the negotiations. So
yeah, of course.
About 1.3 under market, and so maybe 1.5 now. It's with the all the development. We just put the sign up, and it's just pretty fascinating to see like being in one of the fastest growing markets. It's just exciting times. Like it just reminds me of like mobile home parks when I first got involved like in the early 2000s.
Yeah, no, that's cool. So sometimes you self-fund them, sometimes, and because you have a portfolio of properties bring cash flow in, so you can actually, in a new deal, you can actually pay people a preferred return while the deal is under contract, so they get cash flow, and then they get 80% of the back-end profits, turning into an estimated 22% IRR. Again, internal rate of return. Not going to explain what that is in detail. Somebody pull up ChatGPT and ask ChatGPT; they'll explain it. But because we could do an entire podcast about just the definition of IRR and how people calculate it and what assumptions they have underlying and so on. But I'll leave that up as a homework to our audience to study up on IRR and how that works. Well, very cool. So what can we do for you? How can we help you?
Sure. Well, if people want to find out more information, it's land-play, and it comes up right on top of Google. There's actually a term for what we do. It's basically identifying property that could be best use of other alternatives or make a revenue off it. So land-play or Jonathan Tuttle #1 on LinkedIn, how most people can connect with me.
All right, wonderful. So land dash or hyphen, right? Play.com, check it out. Connect. Obviously, there's for if you're an accredited investor, there might be an investment opportunity here. Obviously, I can't speak to it. We don't really know each other. I got alerted about them and invited them to our podcast. So I can't speak to the investment. And this is not investment advice. This is not an endorsement. But check them out. And with that said, well, thank you very much for being with us.
Thanks for having me on. It was fun.
Awesome. And guys, that's a wrap. In summary, look beyond the obvious and look beyond what you're being told. Dig deeper and you'll find opportunities where nobody else sees them. Thank you very much. With that said, give us that 5-star review, share it with everyone that you know, and that's a wrap. Thank you.